If you've been watching the markets lately, you know silver just crossed the $100 mark. For those who have been holding, it feels like a hard-earned victory, but I want to be very clear. This isn't the finish line. In fact, we're likely just watching the opening credits of a much larger shift in the global economy. The main driver behind this isn't just retail enthusiasm. It's a fundamental change in how the US government views silver. To understand where we're going and why a $500 target is being discussed by serious analysts, we have to look at the secret plan currently unfolding in Washington. Most people don't realize that for over a century, the United States was the world's silver powerhouse. By 1942, the US government held a staggering 3 billion ounces of silver. It was considered as vital to national survival as oil or steel, used in everything from high-end electronics to munitions. However, in the late 1980s, after the Hunt brothers tried to corner the market, the government began a massive liquidation. They sold off roughly a million ounces a week for years until the reserve hit zero in 2002. Since then, silver has climbed over 2,000%. The lesson is clear. When the government stops selling and starts looking to secure supply, the price floor moves permanently higher. In late 2025, the Trump administration made a move that went largely ignored by the mainstream press. They officially added silver to the US critical minerals list. This isn't just a label. Being on this list changes the legal status of the metal. It opens the door for federal stockpiling, defense-rated supply chains, and massive government investment. You don't put a metal on this list unless you intend to treat it as a matter of national security. On January 1, 2026, China changed the game. They enacted strict export controls on silver, reclassifying it as a strategic material on par with rare earth elements. China is the world's manufacturing hub. By hoarding their own silver, they are effectively telling the West, if you want to build solar panels, EVs, or AI servers, you'll have to find your own metal. This was the first shot in a new kind of resource war. The US response was almost immediate. On January 5, 2026, the Department of Defense, not the Commerce Department, but the Pentagon, announced a partnership with JP Morgan to build a $7.4 billion smelting facility in Tennessee. Why is the military building a metal refinery? Because silver is a primary weapon in the modern economy. It is essential for the guidance systems in our missiles, the chips in our AI servers, and the hardware of our energy grid. This investment is the clearest signal yet that the US is preparing to rebuild a strategic silver reserve from scratch. Here's why this breaks the market. Total registered silver in all major global vaults. COMEX LBMA Shanghai sits at roughly 1.2 billion ounces. If the US government decides it needs to rebuild even half of its old 3 billion ounce reserve, there literally isn't enough silver on the planet to fulfill that order without the price gapping up hundreds of dollars. There are three ways a government can get this metal. 1. Open market buying. This would front-run the price to $300 plus instantly. 2. Nationalization, taking domestic production, which is only 35 million ounces a year, nowhere near enough. 3. Foreign securitization. This explains the aggressive diplomatic focus on Mexico, the world's largest producer, and Canada. The 5 pillars of this rally are now firmly in place. The deficit. We are in the 5th consecutive year of a structural supply deficit. In 2024, the world consumed 17% more silver than it produced. Inelastic demand, solar, EVs, and AI cannot function without silver. These industries will pay $500 an ounce if they have to, because the silver cost is still a small fraction of the total product price. Applying product limits. 70% of silver is a byproduct of mining copper and zinc. You can't just turn on more silver production without building an entirely new copper mine, which takes a decade. The inventory drain. Inventories in London and New York are at historic lows, with emergency shipments being moved across the Atlantic just to meet current delivery demands. The Trump wild card. The US entering as a buyer of last resort creates a floor that the shorts simply cannot break. If part 1 was about the government's strategic shift, part 2 is about the inevitable market reaction. When you have a massive structural deficit combined with a government that suddenly wants to stockpile, you create a short squeeze of biblical proportions. For decades, large institutional banks have used paper silver, derivatives, and futures to keep the price suppressed. They essentially sell silver they don't own to create the illusion of plenty. But a short squeeze happens when those banks are forced to buy back their positions in a market where there is no physical metal available. We saw a preview of this in late 2025. As silver broke through $50, the lease rates, the cost to borrow physical silver exploded to 35%. This was a distress signal. It meant that those who promised to deliver metal were scrambling to find it at any cost. Now imagine that same pressure when silver hits $150 or $200. If the US government starts competing with these banks for the same limited supply, the banks will be forced to cover their shorts at any price, creating a vertical spike. To understand why $500 isn't just hopium, we have to look at the historical relationship between gold and silver. In 1980, silver hit an all-time high of roughly $50. If you adjust that for 45 years of inflation, that price would be well over $150 today. We just crossed $100, which means we haven't even reached the inflation-adjusted high from 4 decades ago. Now, look at gold. In 1980, gold hit $875. Today, it's trading near $4,900, over 5.5 times its previous peak. If silver were to simply follow gold's lead and hit 5.5 times its 1980 high, it would be trading at $275 tomorrow. When you add the Trump factor, the rebuilding of a strategic reserve, you aren't just looking at a catch-up trade. You're looking at a total repricing of the asset. As your smart friend in this market, I have to give you the reality check. No market goes up in a straight line. 1. Regulatory shifts. In 1980, the government changed the trading rules overnight to crash the price and stop the Hunt brothers. While it's harder to do that today when the government needs the silver for defense, they could still implement windfall taxes or trading halts. 2. Economic shocks. In a major recession, silver can dip initially as investors sell everything to raise cash. However, history shows that after the initial shock, like in 2008 and 2020, silver usually goes on its most aggressive runs as the Fed prints money to save the economy. 3. New supply. While a miracle silver discovery is possible, the 7 to 10-year lead time to build a mine makes this a non-threat for the immediate future. So, what are the professionals doing right now? They aren't chasing the daily hype candles. They're following a specific 3-step plan: slur, prioritizing physical over paper. They're moving out of unallocated accounts and ETFs like SLV and into physical metal they can hold. In a true strategic crisis, a paper contract is just a promise that might not be kept. Leveraging mining stocks. They're looking at junior and mid-tier miners. When the price of silver doubles, the profit margins for a company that digs it out of the ground can triple or quadruple. Shoom! Watching the geopolitical map, they are tracking U.S. profitly injuries, relations with Mexico and Peru. Any resource partnership or trade deal in this sector is a massive signal that the stockpiling has begun. Silver has been real money for 5,000 years. We've spent the last few decades pretending that paper and digital digits are a perfect substitute. But the math is finally catching up. With national debt over $36 trillion and a global race for green and defense minerals, silver is no longer just a commodity. It's a strategic necessity. Whether the target is $300 or $500, the trend is clear. The era of cheap silver is over and the era of the strategic reserve has begun.